Those familiar with how markets work must have heard about the term the Great Crash of 1929 at least once in their lifetimes. The Great Crash of 1929 was due to plummeting stock prices on two consecutive trading days, which came to be known as Black Monday and Black Tuesday. It led to a long-term bearish market and, of course, the Great Depression. In the post-World War I era, there was an irrational exuberance among investors who pushed stock prices to unsustainable levels. It was the time of great prosperity in America, and the investors thought that the economic boom would never end. The bold investors went out on a limb to buy on margin. But in the post-World War I era, steel production declined. Construction was sluggish. Automobile sales went down. Some panicked buyers started selling. Then others joined in, and the Wall Street crashed like a raptor with broken wings. History often repeats itself, but almost never in the same place. What happened in America will happen in China. In fact, it has already started happening. Hi and welcome to TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I'm your host Atul Mishra, and in this video, I will tell you how real estate crash in China has led to a chain reaction of crashes that the CCP cannot stop. Let's begin. Let us start with a basic economics lesson. In your high school, you must have read about related goods. Basically, there are two types of related goods: substitutes and complements. The demand, supply, price, and other economic metrics of one good affects the behavior of other related good. So, for example, if cars become expensive or their sales go down, then the demand for car tires will automatically go down. Now, let us give you a real-life scenario. You already know how the Chinese property market is in the middle of an absolute carnage. Real estate companies are going through a big debt crisis. Property projects are getting stalled, and people are simply not buying new houses. This has led to a slump in the gas sector, and now the consumer electronics sector is bound to follow. After all, consumer electronics and houses are related industries. If people don't buy new houses, they would hardly need household appliances or consumer electronics. The cascade effect in the Chinese economy is already visible. Disappointed earnings in the Chinese real estate sector have already driven China Gas Holdings Limited's stock to a 15-year low. On Tuesday, the shares of China's leading gas distributor recorded a serious slump of 20%, which wiped out $2.5 billion in market value in a single day. The reason for China's gas sector downfall is simple. A dip in fresh house purchases has led to a lesser residential crisis, which has translated into a major loss of earnings for China Gas Holdings Limited. The company announced that the net income for the 6 months through September fell 19% year-on-year, even as the residential connections dropped by over a third. In fact, shares of other Chinese gas distributors like China Resource Gas Group Limited and ENN Energy Holdings Limited too registered comparatively moderate declines. We already know that the cascade effect in the Chinese economy has set in, and the overall economy is on a downward trajectory. So you might wonder what might happen next. Well, a little bit of extrapolation would suggest that the consumer electronics sector would be the next to follow, or the next to fall. The Chinese consumer electronics industry is pretty huge, with some big brands like BOE, Changhong, DJI, Haier, Hisense, Huawei, Konka, Meiju, Panda Electronics, Skyworth, SVA, TCL, Xiaomi, Oppo, and ZTE dominating the industry. In 2020 alone, the market volume of the Chinese electrical household appliances sector had amounted to about 1.5 billion yuan. The growth in Chinese consumer electronics spending is powered by growing household spending by Chinese consumers. In 1990, an average Chinese citizen spent around 110 yuan on household appliances and consumer electronics. Yet by 2020, the per capita household appliances and consumer electronics expenditure jumped to 1640 yuan. Over the past 30 years, market growth of Chinese household appliances was driven by a massive growth in the real estate market. Rapid urbanization in China and countless housing projects led to proliferation of houses by Chinese citizens. Therefore, people spent a lot of money towards buying household appliances and other consumer electronics for their brand new houses. Therefore, housing sector and household appliances grew exponentially as related industry. This is what also led to the emergence of some really big players like TCL Technology, a Chinese state-owned enterprise that manufactures television sets, mobile phones, air conditioners, washing machines, refrigerators, and other household appliances. Similarly, Wuxi Little Swan Company Limited emerged as a big player producing washing machines, air conditioners, refrigerators, dishwashers, dryers, and water heaters. Other enterprises like Media Group and Hisense too have made it big in the consumer electronics sector. While the real estate crisis in China is already creating demand-side problems in the consumer electronics market, there are supply-side problems too. Factory gate inflation in China hit a record high of 13.5% year-on-year in October. Supply chain disruptions and higher input costs are thus leading to production of more expensive and less affordable goods in China, which is set to further push down demand in the consumer electronics sector. On the other hand, China's Manufacturing Purchasing Managers Index, or PMI, remained below 50 points in September and October, which is an indicator of overall contraction in industrial activity. In November, the PMI did rebound to 50.1 points, but expansion in industrial activity remains sluggish. The gas sector crisis in China is now likely to lead to a new phase of contraction in Chinese industrial activity over the next few months. China's gas sector has already crashed, and now with the cascade effect setting in, we can expect that Chinese consumer electronics industry too will nosedive in less than a week.